The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, joining us now to discuss is Wade Peery, Chief Administration Officer at FirstBank. Hello there, Wade. Thanks for joining us. So first of all, off the bat, since you're a crypto markets guest, we just want to get your outlook on how the crypto markets are doing. Do you see it going further up or a leg lower?
Well, I'd say we wouldn't speculate on crypto markets. It's really not our space and our business. So I'll leave that to the experts.
But all right, can you tell us about this bank consortium? Whose idea was it? Where in the process are you? Who will run the servers?
So it's been a collaborative effort between technologists and banks. Figure Technologies, New York Community Bank, of course, were instrumental in founding and really establishing the organization. And the view here is to really clear the way and do the foundational work so that the banks can unlock the value of blockchain. And if you think about the fact that blockchain is to our business revolutionary, and you look at the fact that underpinning our economy and our commerce systems are payment rails that are 40 plus years old, we get excited about the opportunity to revolutionize, and we'll take cost out of those things, speed things up, better customer experiences, and all those items that come along with it. So exciting times to be able to basically reinvent a foundational component of our financial system.
So wait, all the banks that are involved are FDIC insured, right? So how will this particular stablecoin be structured? Is it that your customers are going to go out and put money in a single account, or are they going to open up accounts that are then issued stablecoins against it, which are FDIC insured up to 250? What exactly is the structure from the user's perspective and from the bank's perspective?
Right. So if you think about it, we use the term stablecoin, but what we're really thinking about and talking about is a digital marker. So that digital marker represents on blockchain 1-to-1 $1, and a customer could deposit money into a depository account in an institution insured, and then have the ability for that institution to mint and issue a stable coin, a digital marker, USDF, and transact business on blockchain. So yes, it would be in a relationship in terms of 1-to-1 with $1. So we won't impact the volume of currency. So it does flow strictly through FDIC-insured institutions, which if you visit the President's Working Group report on stable coins, the recommendation coming from that was very definitive in the fact that they would like to see legislation and to the effect that they can only be issued by FDIC-insured institutions.
So I guess my question is this: is that if I go into your bank and I open up an account at $300,000, or I put $300,000 in to get $300,000 worth of stable coins, $250,000 of that is going to be FDIC insured, or is it going to go into an account that is separate? In other words, my deposit won't be insured by the FDIC, correct? I'm trying to figure out how's that going to work exactly.
So your underlying deposit, yeah, sure. So your underlying deposit account is going to be no different than it is today. So that underlying deposit account is subject to FDIC insurance, and then therefore I use the term digital marker versus stable coin because that's just representative of that deposit account. So yes, we're making this function within the bounds of current regulatory framework.
So just to shift to the user perspective for a moment, there's so many private stablecoins out there. You know, we're talking about these government-issued CBDCs. What is the motivation for the user to have one of these bank-issued stablecoins? Like, how would it benefit them?
So I think you think about the stable coins in circulation today, and we don't necessarily think about those as competitors, but when you are issuing stable coin through an FDIC-insured institution, you're also working within that supervisory framework. You have consumer protection in place there. You have stability. So you don't have to worry about things like run on a coin, for example, if certain stable coins may not be backed exactly $1 for $1. So in this case, they are. So I think from a if you think about the foundational real roots to our financial system, it really is the community banks. So as folks trust those community banks, I think we have created what will be a safer option for general use.
Wade, did you engage regulators prior to this announcement? Have you been talking to regulators about creating this stablecoin? And did Powell's testimony in front of Congress, did that affect when this was announced?
Well, certainly have had very deep dialogue with regulators and have been very proactive in that from that respect. And of course, what we are seeing in Congress and just different pieces of information we're gathering from legislators and regulators, regulatory agencies, certainly take that into consideration. But if you think through what happened in the fintech explosion in the last 10, 12, 15 years and how that all happened without banks really being a participant and without regulators being a participant, as many things developed. This is a different approach in that we embrace the regulatory relationship. And so think about this as a collaborative work effort between technologists, bankers, and regulators to establish a very. So we've had a dialogue with the OCC, the FDIC, Federal Reserve. All of those have shared time with us for us to present our idea and good feedback. So we'll continue to work very closely with those bodies.
And did Chairman Powell
Interesting.
today about CBDCs coexisting with stablecoins? Did that affect when this announcement happened? In other words, did you wait for the signals from Powell's testimony before coming public with this?
I would say the timing's more based on the fact that the dialogue we've had with regulators and as we've rolled out, the functionality of this and the plan to work within boundaries, and as we gained acceptance from those folks, we felt comfortable going forward. Not so much pinned to any particular event in time.